Welcome to StockOdds. This is another podcast for you, Odds and Ends, with Rob Friesen and Dave Singh. Good evening, Rob. How are you?
Good evening. Not too bad, not too bad.
All right. We're here trying to prepare for the week ahead, get our bearings, and see what the data has in store for us. We just came off a huge week. The Dow was up 1.4% on Friday, S&P up too big, NASDAQ pretty good too. So it's a really risk-on day. And we had some groups like energy, financials, communication services really outperforming on Friday. And healthcare, consumer defensive, utilities were weak. So it was definitely a risk-on day.
Well, it ended up being that way, but like it was a little bit touch and go pre-market to decide that, as well as the first part of the morning, and then it finally kicked in. Thankfully, I made the choice to be short healthcare, consumer defensive, utilities, and be long some technologies and communication services, some basic materials as well. So my day ended up okay, but I wasn't totally convinced it was risk on. I was just prepared for it. But we've been, kind of held hostage by this government theatrics here. On all the votes and stuff like that. So, it wasn't sort of cut and dry. Like normally the first trading day of the month, you can really bet on a lot of institutional flow, some great, buying there, especially because the last trading day of the month is typically down. And we did have that, right? We had the last trading day down, and then we came in the next day and we ended up, having this rally, which is kind of to be expected normally, but it didn't seem like it was setting itself up for that. Did you find that surprising too?
Yeah, it started off pretty weak, and it seemed very mixed, and it wasn't a typical first day of the month, big money flow coming in, so it was a little odd.
Right.
But October tends to be a tricky month. I guess it's the end of the fiscal year for many funds, also kind of the start to this year-end rally. A lot of the tax loss selling is abated, and I wanted to touch on market capitalization, like really playing small caps against large caps, how to do that, when to get the most out of that kind of theme. And I looked at the dashboard here in the StockOdds Almanac, and preparing for mid-month seasonality for October, the small caps really outperform the large caps. Like IWM is expected to be up 1.2% versus a 0.81 for mid-month seasonality, but then that kind of tends to taper away when you get towards options expiration and the end of the month, and they seem to level out. But what do you have to say on playing market caps against each other, large cap, small cap, and any themes there?
Yeah, well, I think that normally we think of the best 6 months of the year from November to April for small caps, and that is generally true. But I think sort of we discard them the rest of the year. In between there, and I don't think that that's the case. That we should do that. I think we should pay a little bit more attention, because look at the PE multiples of the small cap. They're less, like around 19 PE, versus the mega caps are at 28. And I think that just basic economics, the reason we have stock markets, the lure of capitalism, things like that. It's like you want your small company to become a bigger company. You want it to grow. And so normally you would think that small caps generally have much higher PE multiples because they don't have a lot of earnings and things. Here we see kind of the opposite. Even large caps are a higher PE currently. So I think there's a lot of room for small caps to still find their way. And what I found interesting was for the month of September, which is not a very good performing month, is that micro and small, they were down, but they beat out all the other groups, mid cap all the way through mega cap, right?
Correct. Mega cap was down, I think, 4.8%, and small cap down only 1.7%. So 3 percentage point advantage.
Right, and that did work. It did work for us for the month to sort of focus on some of the more defensive names long, and finding these big sort of overvalued large into mega caps to find to short, and other technologies that were a little bit sort of teeter-tottery because they'd gone up so much, right? And they were kind of like, didn't have any profit-taking hit them yet. Well, it started in September and it continued relentlessly through the month. So, some of those tech names were down pretty significantly by the end of the month. So
they were.
So what do we expect here for this coming week here? Right now, how are the commodities and futures looking overall? I mean, I'm seeing the U.S. dollar selling off again for another day. Possibly that will continue. So we had a big move on the U.S. dollar, and we're starting to roll back. This would be the third down day in a row now if it keeps going.
And the VIX is down. The futures on the indices are up. Oil tends to be a little bit flat right now, kind of weak.
So I got a question for you. Mm-hmm. How do you think that UUP, the US dollar ETF, and TLT track together? Do they move in opposite directions, or do they move the same? So that's the dollar with the 10-year bond. TLT, well, actually, sorry, 20-year is what it, 20+ year bond is what it's tracking, the TLT.
Yeah, so as the dollar strengthens, interest rates are going up hand in hand. Is that where you're headed?
Yeah. So they kind of, actually, the correlation TLT to UUP is about 0.35. So it's not like a perfect correlation, but there is some correlation there. So, but definitely like groups like the big cap stocks like Google, Facebook, Apple, all those guys, there's an inverse correlation there to TLT. And for something that would, be less inverse would be something like XLU, because it has that bond component to it, right? So correct. Interesting. Yeah, so we have to keep an eye on UUP and TLT. This is kind of more critical now than it is in some months, and that's just because we have, this taper consideration. We also have the government. Everything related to that is related to how much U.S. dollars are available. So obviously, interest rates are affected there too. So I mean, if you're going to print a $1 trillion coin, I mean, there might be some impact on the dollar, wouldn't you think?
Has to be. I have a question. So for tomorrow and this coming week, if there aren't too many macro themes to play off each other, are you going to stick with the odds within sectors, or are you planning to play sectors against other sectors? I mean, what's your take on trading for tomorrow?
Well, I mean, I'm really adamant about this, and is if you don't have a lot of information, if you don't have a lot of predictor values, and what I mean by predictor values is interest rates have moved, or the dollar's moved, or oil's up like crazy, or gold's up or down like crazy. When you don't have those indications, you don't have that type of leadership, then you got to be more diversified and less sort of exposed to any one thing. But if you have information, then as long as you can interpret what that information is, whether there's still gas in the tank of that catalyst or that engine, then you can use those groups to your advantage. You can use what it impacts. So example, if TLT was to, it has been selling off for, last week, let's say. So it's starting to turn. Now let's say it continues up. What does it affect, right, when it goes up? And the same with the dollar. If the dollar goes down, what does it affect? Like, we're going to have to just look at that information in the morning. You can see it now to some degree, right? Mm-hmm. But taking it over into the morning, is there going to be a change? Because, we've got other markets around the world. We've got global considerations. We don't know if something happens. We don't know if there's, an event. So we just have to kind of look at that in the morning and see if we need to make any adjustments. So as of right now, we can only go on the information we have. So what do you see in the futures at the moment?
Yeah, futures are solidly up on all the categories.
But not huge, right? I mean,
No.
we're up like 0.3, 0.37. Like, so the Dow futures are up 0.3%, S&P up 0.37, NASDAQ up 0.43, Russell up 0.35. So is the NASDAQ 100 futures telling us something? Is there going to be some leadership back in these, NASDAQ 100 names? Is the NASDAQ 100 down the most for the month of September, right? The VIX is down 3.16% right now. So it's telling us that we have an opportunity here for a follow through from Friday. So some nice risk on opportunity. So if I just told you risk on is in play, would that lead you into some NASDAQ 100 names? Would that lead you into some Russell 2000 names?
Probably some Russell 2000 names, the best quality ones within there. And then also some big cap tech, I guess, because NASDAQ is even right now set up to be stronger than the rest of the indices.
Right. So as far as the mid-month seasonality going out, we have semiconductors. Is that, let's look to see if that's something that already kicks in between now and mid-month. Mid-month starts on the 9th business day. Let's just look on the calendar and see when that is. So we got, the 9th business day would be next Friday, right? No.
Next Wednesday.
Wednesday, yeah. So we got week and a half here to go until then. But let's keep an eye whether semis have some traction for the month. Well, no. See, here's the problem. Look at semis for the month is 1.47, and look at for mid-month 1.58, which means that there's not going to be any reason to really be involved, other than just that mid-month window. So I don't see as a play for this next week.
Yeah, it's going to do stronger mid-month and also towards the end.
Yeah, see, that's important to note. Like contrast what's expected for the entire month against any of the other events, and you might actually, just be able to really have some good timeliness. And that is part of trading, is getting the best return on capital you can by not having money sit around as dead money for a long time, right? Not using it with things that don't perform, but going in and using it when it's, expected to be the hottest. And for SMH, it is mid-month seasonality. So good. I'm glad you pointed that out. That's excellent. So we should, put in all our other major ETFs. You can use sector ETFs or industry ETFs, put them into the seasonality calendar and see what's expected, right?
Pretty good. Well, I'm just going to be working the next couple hours and putting baskets together, really focused on market cap and looking for high quality small caps and lower quality or exhausted big caps.
Okay.
What can I pair?
So when we look at the 1 week performance, which ended on the Friday, which is the first day of the month, and we had the 1 day performance. So let's just see if the 1 day performance, which was turned into a risk on day, first day, was it in keeping with what happened for the 1 week? Energy for sure. Financials have held up. Financials have held up really well. Like when the TLT was going down, financials were going up, right? Because bonds going down means yields are rising, means financials are doing better. Yes. So long financials still held up overall. For the 1 week, they were only down minus 0.03, whereas technology was down minus 0.422, right? So would you be lured into going and buying some of the laggers for the 1 day performance and selling the leaders like for example, selling energy and buying healthcare, or would you kind of stay in keeping with what the one day did, meaning still short healthcare, still short consumer defensive, still short utilities, and long, energy, communication services, financials, industrials? What would be your take?
Yeah. Well, because Friday was such a big day up and we tended to close near the high, I think there's more follow through rather than mean reversion. So I think the same themes that were strong on Friday probably are going to have some more behind them, at least for the start of the week.
Okay. But I mean, even on Friday, like how risk on it was still technology only was up 1.06% versus energy was up 2.14, right?
Yeah.
So still a pretty big spread there. How do you think, so if the dollar's heading down a little bit, basic materials still might be favored?
Yeah,
and they're pretty forgiving, even if you don't get the big bang for your buck. They seem to be pretty forgiving, right? Lowers your variance.
And of all the sectors, they're kind of in the middle of them. It's not the best or the worst at this point.
Okay. Well, I mean, communication services, like being with the NASDAQ 100, some of those same stocks are in that. Looks like it has room to run. So maybe the long plays will be, like energy just scares me a little bit just because it's been up so much. So might not want to do that one, but might want to be long communication services, some industrials, some basic materials and technology, and maybe some consumer cyclical, and then be short utilities, defensive, and healthcare again.
Consumer services has a good Google and Facebook, so it's a good portion of FANG.
Yeah.
So,
yeah, I know, but at the same time, some of those mega caps are overvalued too. So the key here is then looking. I guess the key is sort of starting from the Russell perspective, looking for some really good names there, because you want that risk on exposure, and then being very selective on your overvalued tech names, adding some of it, but not going crazy with them. And then we got to find some big cap stuff to be short too, right? Where you can find a bit of it in healthcare. I think some of these other names that we're hoping for, some play in the vaccine world might get a further discount just because of the therapeutics, like Merck, and I'm sure there's other therapeutics on the way too, right? So
Merck was up huge Friday, and then it
and then
get a lot back.
In contrast, Moderna and Pfizer were down pretty big too, right? So so that's what, like, if you think of it like this if most people are getting vaccinated, and there's some argument about the third shot and stuff like that, won't have the exposure probably that the first two shots did. You could say that the therapeutics coming on board, deals more with the breakthrough cases that you're seeing, and other people that aren't getting vaccinated. So there might be, you might look at it from the news is out, think the Moderna and Pfizer got more fully valued, and now's not the growth opportunity that may happen in the therapeutic side. So something to watch for. I'm gonna take a look at where they are. I didn't get a short off on Moderna or Pfizer on Friday, only because they were down so much, right? I don't want to short that kind of discount, off the open. You want to make sure that your pricing is still, got some room to move instead of the risk of it backfiring on you, right? If you short something down 9%, yeah, maybe it goes down a couple more percent, but what if it retraces on you? It's going to hurt, right? So, all right.
Well, lots of ideas, lots of homework to do.
Yeah, so that's good. I'm glad we had a chat here, and all right, I'll let you go and have yourself a good night.
You too. Thanks a lot. Bye.
All right, cheers.